morning, friends. Welcome back to my channel, Intraday Trade. My name is Robin, and let's do an EP and Nifty analysis for tomorrow. So, before we begin the analysis, just a quick discussion on what happened today. So, there was heavy call writing done by both FIs and pros, and we were expecting a sharp fall. However, that did not happen, and I'll tell you the reason why. Okay, so this is something which I wanted to share. So, this is a thought that we have to think. See, we closed here yesterday, and this was the swing low. Sorry. So when the market opens flat, what do we expect? We expect a breakdown, and we feel that the market will fall down further. Okay, and that's the kind of positions that they were holding. But this becomes a very simple and obvious trade that okay, the market is falling and it will continue to fall. But here the problem was both of them were on the same side. Imagine they had nearly about 3.5 lakhs call short. Okay. So if they have 3.5 lakh call shorts, it will be very difficult for them to make money if the market falls in the opening itself, because we know that they have call shorts, and that means they have to cover their position with call buy. Okay. And do you think we'll uh, take the position from them? So that becomes a little confusing. And obviously when the market opens, there is a lot of volatility, and when they feel that their orders aren't getting uh, placed for themselves, like they're not getting that volume, so they took the market up. So once, what they did is they started selling put shorts heavily. I don't know how many of you watched it, and then the market shot up on the upside. But if you remember, we spoke that so we could have taken a trade today. So one is we had a resistance somewhere here, and it reversed from here. It made a double top here. This is one of the entry it gave on the put side. So obviously, like we know that there is one sharp fall that is about to come in, so that they can exit their call shorts and the put longs. And when that will happen is obviously they'll make all the retailers bullish, and then only they'll take the market down. So this was one of the entry, and the other entry was the channel entry. Okay. So morning it did not break the channel, but in the end, afternoon when it broke the channel, it also gave a follow through. Like if you haven't seen my video of a follow through candle or how I read candlesticks, please watch that. It broke this channel, gave a follow through. We always discuss that if the candle is small, we take entry at the low of this candle. This is the candle which gave the entry, and here it fell all the way from 42,100 to 41,900. So a straight fall of nearly 200 points. Okay, so these were the places where you could have traded, and we also had this line of 42,278, and this also gave us a clean entry to go short. Okay. So, and one more thing is, uh, if you watch option chain, I don't know how many of you watch the IV chart. You can actually see where these people are booking their positions. Okay, so what happens when there are continuous? I'm sorry, I have a clear throat today. Okay, so what happens when there are continuous red candles and the market is falling heavily? uh, what happens? Obviously, the put IV should increase, right? Because all the sellers become buyers and new buyers also come in. So obviously, the IV increases. But this is the place where they'll book their profits, they'll book their call shots, they'll book their put longs. So look at the IV chart. So this fall started somewhere around 12:30, if I'm not wrong. Yeah, 12:20. Okay, from this candle is 12:15. So let's imagine from 12:15 to 1:25. Okay, so near about 1 hour 10 minutes they were falling. So this red line you see, this is the put IV, and the blue line is the call IV. So when they started the fall, obviously the put IV crossed the call IV. That means definitely there is some action on the puts. It fell. So until 12:30. Okay, so where is 12:30? So this is just knowledge that I'm sharing. So 12:30 is this particular candle just before the breaking of this channel. What happened at this time? The call IV started shooting up. That means, see, the put started coming down when the market was falling heavily. So this means that there is not much of put buying that was happening. It was just some short covering that was happening, whoever wrote the put in the morning. And continuously the call IV started increasing. And at the end, the market gave a sharp U-turn after. So see, this is where the call IV spiked all the way from 21.51 to nearly 23. So what is this time? 120 to 130. So where is 120 to 130? So this red is 120, this is 125, 130. So within this three candles, the call IV started shooting up. So you can actually make out that a big green candle is going to come up at this red candle. Okay, so you can actually watch IVs and trade based on that too. Okay, so enough of the discussion of what happened today. Let's move on to our analysis for tomorrow. See, market is just consolidating. It's very simple. One day FIs make bullish position, one day they make bearish position, and they have kept the market in this range. So this range is going to continue until and unless we see a breakout of 42,700 on the upside or a breakdown of 41,700 on the downside. So market is going to remain between 41,700 to 42,700. Okay, above 42,700 market is bullish. Below 41,700 the market is bearish. We'll immediately break this and we can come down. If we break this, obviously we'll reach this place, and then finally we may reach this place too. Okay, so this is what we can see here. And similarly, Nifty is also doing the same thing. It is just consolidating at the same range. So for Nifty, if it breaks 17,800 or rather 17,770 decisively, it is going to fall to 17,500 and eventually 17,100. And if it gives a breakout of 18,050, so it is already closed at 18,053, then it will continue to go to 18,200 to 250 area, and then it may go to 18,425. So this is what we're going to trade. So no confusions hereafter, regardless the position that they make. So the only thing that we are going to do is both of them, whenever they are in the opposite side, obviously that is when we can get a very good market, because it will be in the favor of FIs and the market may move towards the favor of them. And the second thing is, whenever they have positions and the market has opened against them, is when there is going to be a solid trend. Okay, so until then, they are just going to confuse us by making bullish and bearish positions every day. So let's quickly look at the data. If you look at the data today, they have created 4,295 long positions in the index future, and they have closed almost 11,800 future shorts. So yesterday they added 10,000, today they removed 11,000. So this is what they're doing. A day before they added 10,000, yesterday they removed 10,000, today they today, yeah. So like we have this data here, we can quickly check what they have been doing these days. So see, on 13th of January, they removed 10,400 shorts. Yesterday they added 10,000 shorts. Today again they removed 11,800 shorts. So this is what they're doing. And if you look at the options also, yesterday they were completely bearish. Now today they are completely bullish. Okay. So this is like both side, you can see call, close long and close short. However, they have definitely taken put shorts. So they have sold about 44,000 puts. And similarly, if you look at pros, they have created 9,200 put shorts, and call they have just closed. So basically, both of them have created support. So tomorrow, so now we should not have confusion. Like what they're doing is, whatever position that they are making movement on the opposite direction. And usually in these 2 days, we are seeing both side move. Then I will quickly check out the levels. I don't know why Nifty's chart is blank. It came back 5 minutes. Okay, let me activate the lines. So all the lines are going to remain the same because the movement is also within the range. Okay, so now what we are going to do is, so tomorrow, in case if we open flat and we get a dip until this trend line, uh, and this also is a swing. Okay, this is a swing support. Where is this particular support? Let's quickly check. It is around 42088. Okay, so any dip until 42088 or 42100, or within this trend line, obviously we are going to go for a call trade. Okay, what should be the target? Obviously the first target is 42278, and if it continues, there is a possibility of continuation, and it will reach 42430. So this should be your final target. And in case if it consolidates and breaks it further, it can go to 42600 or 700, the weekly high that we had. Okay, this is a weekly high. Yeah. So from the weekly high to the weekly low, we did not fall much. So this is again slightly being bullish. Okay, so previously we fell until here. This time we made a higher low. Okay, any significant gap down tomorrow? So imagine that we open gap down below today's first candle. Okay, so which is around close to 42020, close to 42,000. Then whatever rally happened here, they'll be in trouble. So obviously we'll see some dip towards downside. We can go for a put trade for a target of 41,800. Okay, and similarly, if we open gap up say at 42,400, then obviously we'll come down for a dip, and then it is going to be a little problematic because we will have to wait until this place to take actually a call trade. Okay, but what we can do here is, if we open at this place, we can think of booking, we can think of taking a put trade. So how do we do that? Say if it is rejecting here itself, we take a put here and we come for a target of this level, which is around 42,250. Okay, so near about 200 points fall. Imagine if it is opening above this, only if it closes below this is when we are going to go for a put. And if you think that it is giving follow through closing above this, then wait for a small dip, or in case if you get a dip until PDH. Okay, then you can again take a call trade for a target of 42,650. Okay, so this should be a plan, but the safest entry would be something like this. It should give a dip, take support at PDH, and then break the high. So this is the perfect trade for an upside. Then this will continue to the upside. Otherwise, it will make a lower high and then come down, break this, will still be bullish, and it will eventually come down. We think of taking an entry here, then eventually it will come down to this place. So that can become a trap. So be careful on that. Now let's quickly discuss Nifty. This is Nifty. Let me switch off my ORB. I'm not sure how many of you are trading ORB. Me and my team, we still follow that, and we get excellent trades based on that. See what Nifty did is, it where is 9:15? Yeah, it opened here. We had this resistance, right? Yesterday we discussed. It gave a breakout, went up, and the next target we had is 18041. Came back down to the same place, took support, broke this channel, went all the way to the target. So now what should we do in Nifty? The Nifty is surprisingly out of this channel. Okay, so but we have a trend line here. So tomorrow, in case if we open flat and if we do not break this 18040, okay, if we do not break 18040 and we cross this high, we take a call trade, and your target should be somewhere close to 18160. Okay, so your entry would be somewhere close to 18070, and from there it can move up to 18160. Here we should definitely book it because uh, previously they have been respecting this trend line for some time. Let me show you. This is actually a higher time frame trend line. See, if you see here, so this is the trend line that they are respecting on a higher time frame. So again, we may see them rejecting from there. Okay, but in case if we open gap up here at this place around 18160, obviously they'll book the put shots that they have, and we may see Nifty coming down until this channel. So we can take a put entry at around 18160 and expect a target of 18,000. So this is gap up, and we also spoke about flat and giving a dip. And just in any case, if it is opening flat and coming below this, like we already discussed, we'll take a put trade, but our target would be 7934. Okay, this should be a target. From here, it can be sideways here. So whenever it gives a breakout, so see, if this trend line has to be broken out, it has to consolidate here for another day or two, and then maybe it can try for a breakout because the trend line will come close. But other than that, we know that if we directly go up, we have a resistance here. Okay, so all that we need to do is they take positions and the next day they move opposite, and that could happen. But it is always better you stick to the option chain to understand what's happening on a daily basis. So this is my view on Nifty and Bank Nifty, and I think we did not discuss about a big gap down. If we open below 17934, then we can see a sharp fall to 17774. Okay. So thank you for watching. Let's meet in another video. Till then, take care. Bye bye.